not even gonna lie to you guys, it's pretty rare that I make 3 videos in a 24-hour period. I feel like that's just a lot and unnecessary, but when it's necessary, I'm not afraid to do it. And just to be 100% honest, I was having a fantastic day. I mean, sitting back, eating the best watermelon of my freaking life. And I'm not gonna stop to make the video. I might eat the watermelon in the video just because I don't care. Half of you guys like me, half of you guys hate me. So if you hate that, then sorry. Watermelon's like my favorite thing ever. I got my daughter back from her mom's today. It's been 2 weeks, a fantastic day. And it just got a whole lot better. No, not because the watermelon, and no, not because I fixed the freaking fire alarm. Yes, I get it. You guys are hilarious in the comments. Almost every comment on the last 2 videos was fix the fire alarm. Point taken. Thank you guys, because it just becomes one of those things where you don't even realize is happening anymore. And to be honest, I didn't think it could be picked up in the mic. That's not what we're here to talk about. Watermelon, fire alarms, none of that. Screw that, okay? Well, this is good, but you get the point. Tom Lee just came out with a freaking fascinating new interview on CNBC. It's about 5 minutes long. Yes, I'm going to play the whole thing. And to be honest, I mean, I got a lot more bullish on Tesla stock while listening to it. Not even gonna lie to you guys. I mean, how could you not? This summer could set up to be epic for Tesla. And I know some people, they're gonna say, oh, Tyler, you said Tesla could fall 20 to 30% in the last video. Yes, that's a fact. That's true. I showed my position, and I'll show my position after we get a 20 or 30% drop or 20, 30% rally. And this comes down to June 13th. Like it or hate it, if Elon's comp package does not go through, Wall Street's going to say Elon could leave Tesla. And as the odds rise that Elon could leave Tesla, it's kind of like stocks in 2022, where the Fed was raising rates, odds of a recession were rising, stocks were falling. If Elon's comp package don't go through, the odds that Elon could leave Tesla will go higher. Say, Tesla stock to the moon.
Tesla stock to the moon.
So let's go ahead and play the clip from Tom Lee and then come back to discuss what I'm specifically ultra bullish on now in our markets, and kind of a realization that I made. Maybe it was the watermelon. Like, seriously, I don't know what is going on. I ate the whole bag. I just can't stop.
NVIDIA and the AI-powered rally showing little sign of slowing today, with the chipmaker hitting an all-time high. The Nasdaq closing above 17,000 for the very first time. NVIDIA is up nearly 20% since its earnings report just last week. And check out some of the other names in the chip sector hitting all-time highs today. Micron, NXP Semi, Qualcomm, and Texas Instruments. So, should investors count on NVIDIA to keep driving the market higher? Joining us now is FundStrat's head of research and CNBC contributor, Tom Lee. Tom, good to see you. So, you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So, how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is to really stick with what's working, and what's working is AI-related names, whether it's NVIDIA or highly correlated stocks like Cadence or Supermicro, the Ozempic-related trades, industrials, financials are doing great, and the Bitcoin and the proxies as well as, I think, a growing small cap stealth rally. So I think there's still a lot of ways to be invested in this market.
The small caps have been hot to the touch, though, not in a good way, especially with yields occasionally spiking. So are there certain areas within small cap that you'd say average into, or how are you treating them compared to the mega caps?
Well, small caps, I think, have been very sensitive to the probabilities of a Fed cut. So I think they're very sensitive to actually when the Fed begins cutting. And, the last few comments from the Fed have actually hurt small caps because the odds of a June cut have been pushed out, and maybe, the odds of a September cut are, diminishing. So I think that weighs on small caps, but it doesn't take away from the fundamental attractiveness of small caps. Earnings growth is close to 19% in the median Russell 2000 stock, and the median PE is 11 times. So you're getting far better earnings growth in the S&P and a much lower PE multiple.
What's incredible about that, Tom, is the fact that we went from, at the beginning of the year, a market that was aggressively pricing in this flurry of rate cuts to now a market where stocks are continuing to move higher as investors digest the possibility, or I guess are hoping for the possibility, that we have a Fed that doesn't raise rates again before the end of the year. That seems to be the thing. That's sort of being taken as the thing. Every time Powell or somebody else comes out and says, oh, we think the peak is in, we don't think we have to raise again. We've really seen an incredible pendulum swing, and it raises the question, how much now hinges on earnings if that's going to be the scenario?
Well, I think that's spot on. First, the number of expected cuts has shrunk, but it's really shrunk for the right reasons. The economy's been good. Inflation is progressing, maybe not the speed anyone would like, but the reality is, 3% or even 7% inflation is really good for corporate profits. So I think the earnings outlook actually is far better than most expect. You can see the beats by NVIDIA as an example, but S&P earnings next year, maybe if consensus at 270 something, it might be closer to 280. So you can see why there's upside for stocks.
We just had the S&P close at 5306 today. I believe your year-end target is still 5200. Does it need to come up? How are you thinking about it?
Yeah. Our year-end target is too low because, next year's earnings, if it's 280 and you put a 20 multiple, that's way above 5200. But it's only early June, and I think we're still just deciding whether or not there is a speed bump between June and December. But yeah, I'd say 5200 is too low.
Tom, how do you treat the weight loss and overall health trade epitomized by Lilly? It's up at real highs now, $750 billion market cap, but it's been bouncing around in this range for about 3 months.
Yeah, it's I think a lot of large cap stocks that have been leading show similar patterns of sort of consolidation. And, I think it would be too early for someone to say that, Ozempic and the GLP drugs have peaked. So to us, it's really an opportunity for someone to be accumulating. I don't think it looks that different than NVIDIA into earnings or, many of the stocks that have broken out recently.
U.S. stocks, is that really the place to be right now? Or are you looking abroad as well, especially if you do have an ECB, for example, that's going to cut before the Fed?
Well, it's nice to see other central banks cutting because, from our perspective, inflation probably is tracking better than most expect. But I think the best companies, especially in technology and financials and healthcare, really mostly are in the U.S. So I'd feel a lot more comfortable recommending investors stick with the best companies in the U.S. rather than try to buy something outside the U.S. because of relative valuation.
Okay, so if none of that made any sense and how that's applicable to Tesla at all, Tesla's not a small cap stock. Tesla is not, deemed an AI stock as of right now. Well, here it is. Let me kind of break it down. As I just said a couple of minutes ago, as rates go higher, the odds of a recession get higher, right? Investors price in a higher odds or higher likelihood that we will go into a recession. Now, Tesla's not a small cap stock, but it works the same way as a small cap, especially, a Tesla, a fast growing car company like a Tesla. It's very interest rate sensitive. So one, when rates go higher, it really hurts the auto business. But if you do eventually go into recession, autos are like historically the last place you want to be. Okay, now you can make an argument that Tesla's maybe a little bit different because the average buyer or household income of a Tesla buyer is over $100,000 a year. Maybe that's, doing better than like a GM or a Ford that's like 60 plus thousand a year, right? Between 60 and 80,000. So maybe Tesla employees, or I shouldn't say that. I almost contradicted myself. I said maybe Tesla employees wouldn't be the first to lose their jobs, but hey, we already seen what just happened there over the last couple of weeks. people that buy Teslas probably aren't going to be the first ones to lose their jobs in some kind of mild recession. But that's not really the point that I'm getting at here. Small caps, they work the same way. When rates go higher, they sell off more than big tech and really the rest of the markets because they need to raise capital. If you go into recession, capital, markets can really dry up. If you need to go raise capital, you may not even be able to get the funding if you're a Fubo or some kind of small company that maybe needs to raise capital. I don't know why I just picked on Fubo there, but the stock can't get out the dumps. Okay. One of my holdings, by the way. And Tesla works the same way as that, right? But to the opposite side as well. Tesla's a large cap company with great AI prospects, the best in the world, in fact. The markets don't care about that right now. And it's easy to see why, because rates are where they are and there is an elevated risk of a recession, whether the bulls or bears want to admit that or not, because of where Fed funds rates are and the reluctancy the Fed has to actually start cutting rates. When the Fed does start to cut rates, that is really going to benefit Tesla because, one, the odds of a recession fall. Okay. And I don't think that's talked about enough. There's more attention, put on when rates fall, then that's easier for companies to raise capital. Tesla doesn't need to raise capital. That's not why it correlates to small caps more than big tech or average stocks. It's because of recession odds, right? So I think that's pretty important to kind of take note of. But let's think about this quite logically. Big tech. If you exclude Microsoft, Apple, Amazon, Google, Nvidia, Meta, Microsoft, all of your Magnificent Seven stocks, the markets would have done nothing over the last couple of years. Okay. Now, why is that? Why do investors, want to own these AI stocks and specifically Magnificent Seven for years now? 3 reasons. Most notably is when rates are rising for a Apple or a Microsoft or a Google or an Amazon, that actually benefits them because they bring in more cash because they have tens of billions, hundreds of billions of dollars in cash in the bank, and they put that into T-bills and they make 5% risk-free. It's literally nothing. It goes straight to the bottom line. Those companies, they support their operations with cash flow. They don't even need to tap into that money. Okay, they're doing buybacks with that money, giving that money back to shareholders in most of these cases, or just adding it to their already large cash pile and getting more bonds and more money. It's this snowball effect, right? Well, okay, that's one reason. Rates going higher is a tailwind to those big tech names. If we theoretically do go into a recession and you have to be allocated to stocks, because yes, believe it or not, some funds have to be fully allocated to stocks and they can't sit in cash for too long. They can't have cash be a certain percentage of their portfolio. They can't go short in stocks like Cathie Wood, most notably. She can't short stocks. She has to stay long. Where do you want to be if you are a fund and that is your mandate? In a time where there is an elevated chance of a recession? Well, clearly big tech, because Microsoft, Meta, some of these companies may actually benefit from a shallow recession, with individuals maybe wanting to advertise more or maybe become more efficient. You could see how Meta or Microsoft or some of those other names could actually benefit from a shallow recession. So if we did go into recession, you'd want to be in those big tech stocks. Those are 2 reasons. And that's why they started to do better and did better than the broader markets in 2023. Now you have AI sprinkled on top. And that's the 3rd reason why these stocks are doing well. And when these AI stocks, Magnificent Seven, is doing so well, forget about Tesla. They have recession risks. If we go into a recession, Tesla's going to get destroyed. That's what Wall Street is saying. And the odds of a recession are too high. The risk is too high. No matter what Tesla does, no matter, what FSD does, it just doesn't matter. As I have said very publicly, I believe the first cut is coming July 31st. And if that first cut from the Fed is coming July 31st, that means that no later than like early July will markets start to really price that in. Now we're going to get the PCI report, or PCI, what the heck? PCE report coming out today. Too much watermelon, man, I'm telling you. We're going to get the PCE report coming out this Friday. That's expected to show the slowest decline, the slowest acceleration of PCE or overall inflation throughout 2024. That's going to be a really good step in the right direction. If we come in even lower than that, that's going to be huge news. Small caps, Tesla could have a 5+% day on Friday. It is going to be massive. Now, coming in early June, we're going to get the CPI report, and then coming in early July, around July 10th, 11th, you're going to get another CPI report. So you still have 2 more CPI reports, 2 more PCE reports until the Fed meeting of July 31st. And then you're going to be pretty close, about 2 weeks out, to another CPI report. I think if the next 2 CPI reports come in lower than the last ones, then you're probably going to get enough confidence from the Fed to start cutting rates. After all, there's a lot of political pressure on Jerome Powell, and he's begging for a reason to start cutting rates at this point. And when you mix these factors together, I think the markets, or big money, can start to reallocate to other areas of the markets with a little bit more confidence that maybe the Fed will do what they need to do to avoid a recession. Because right now it's still kind of balanced. Like the Fed's not necessarily trying to go into a recession, but if they need to, they will. Once we're out of that environment, Tesla can start to do a lot better. Now, Tesla specifically is going to have some pretty easy year-over-year comparisons coming in 2025, among other catalysts, right? June 13th, hopefully that goes in our favor. Upcoming earnings, July 20th or so, should get good news there. July 31st, first cut from the Fed, that should be some good news as well. We also have June 11th. Is it June 11th? June 12th, when we have the next Fed meeting. That may or may not be, good. I don't think anything's really going to change. It's coming June 12th. There's actually almost a 1% chance the Fed does hike rates coming June. So yikes. And that's really going to depend on what happens this Friday with PCE, whether the markets do start to price that in more. Could be negative if that happens. Not my expectations though. Bottom line here is you get down to July and really early July at the latest, and I think Tesla can start to do a lot better. Now, June 13th, if Elon's comp package is reinstated, I think that day Tesla could rally 10+%. As you really alleviate the risk that Elon Musk might leave the company, right? Now, the other aspect to this is money in money market funds. You have $6.4 trillion in money market funds. Just to put this into a little bit of context, that's about 3 NVIDIAs, or almost 2 now since NVIDIA has rallied so much. That is over 3 Russell 2000s. That is just a colossal amount of money. This is 10 Teslas. If you get a fraction of this money coming into stocks, you're going to give markets quite a boost. And I think, this will get allocated into areas of the markets that will have a tailwind effect to rates falling. Not just big tech, but small caps, areas like Tesla. And I think that could set us up for a real sleeper surprise rally, as Tom Lee says, over this summer for small caps and Tesla. Tesla's, again, one of those companies that kind of like a small cap, but is a large cap company. It has the same kind of characteristics as a small cap. Besides, Tesla does not need external funding. They are self-funded. But, everything else, Tesla, small caps, they kind of fit together. And I think we will see them kind of trade together, especially as more risk on appetite comes into our markets, besides just in the AI sector. And then I think Tesla's AI will start to be more appreciated coming in August. And yeah, August, September could be very strong months for Tesla as well, as long as we don't get a pre-election sell-off, which can happen sometimes. So yeah, that is it. I did want to share this information as quickly as possible because I think some of you guys probably wanted to hear this. Some of you guys maybe needed to hear this. But again, anything can happen, and be open for different things to happen. You know, have your portfolio or maybe just mentally positioned for a recession, for a boom time, for high inflation or low inflation. Tesla stock to do nothing for 2 years, 3 years, or Tesla stock to go to all-time highs in 3 months. That's how you have to mentally be positioned in this company. You have to be willing to ride this thing down to $50 a share, down 75% from here, or you have to, be willing to, ride the stock to all-time highs. I think that's a little bit easier than riding the stock down to 50. Again, probably not going to happen, but anything's on the table here, and I do think in the next couple of weeks, I think there's going to be a lot to be excited about. But then again, I could be wrong. Tom Lee could be wrong, even though he has a much better track record than I do. We both could be wrong. Let me know what you think down below in the comment section. That's what is really important to me. That's it. You guys have a fantastic rest of your day, and I will see you in the next one.